Well, hello and welcome everyone back to OAG's latest webinar. We've had the summer off, although we were back earlier this morning, and we're feeling refreshed and raring to go, or something like that. Summer is on the way out in the Northern Hemisphere, certainly in the UK. Feels like it's behind us, and the temperatures are cooling down, so much so jumpers are out, certainly where I am in the north of the country. The regular listeners, watchers amongst you will notice that we're using a different platform today. Hopefully that will bring you all a better experience, but please bear with us if there are any technical challenges. I'm sure they'll be entirely caused by me, so hopefully we'll get through those and minimize any challenges. This afternoon, I am pleased to be joined again today by John Grant, OAG's Chief Analyst. John, welcome.
Hello, Deirdre. Good to be back with you. I've changed my top, so all fresh and ready for another session. Looking forward to it.
Excellent. Good. And delighted again to be joined by Gary Bowerman, Director of Czech in Asia. Gary is a somewhat regular speaker for us on our webinars, always bringing interesting insights of the part of the world that you're based in. Gary, how are you this afternoon?
Yeah, good. Well, evening. It's a humid evening in Kuala Lumpur. So yeah, hi John, hi Deirdre. Look forward to our second session of the day.
Okay, great. Well, let's move on then to the first of our slides. And really, the purpose of today's webinar is to give you an overview. We decided that it was time to take stock of summer. How's the industry coped? I think we're all a bit scarred from last year, which was the return for many regions, and the industry was beset with operational headaches in almost every part and every corner. So let's have a discussion about whether we're past that sort of operational fragility, and are we now at the point where we can finally say we're moving past recovery and into growth, and we'll take a look across the regions to see whether that is the case, whether we can really say that. And then we'll turn to China, something that we've done throughout the pandemic when we've talked about markets and how they're recovering. And Gary will hopefully provide us some interesting insights on what the sentiment and feeling is about demand coming back in China, because there are very many markets that rely on China, particularly in Asia, but also beyond. So that's our agenda. That's what we'll hopefully cover. I'm sure there'll be lots of other interesting snippets thrown in. If nothing else, you can watch back this morning's webinar to see some of those. Hopefully we'll bring you some interesting and alternative views as well this afternoon. Please send questions to us as you go. There is a chat function where you can do that. There's also a specific question section, and we'll do our best to get to those as we go along. Okay, so looking then at the first of our slides. We show this every webinar. We don't make any apologies for doing that. It's our sort of check-in on where we are in terms of global capacity. And as of September, capacity is now just below September 2019. So you can sort of see that we're tracking, the lines make it look like we're just very, very slightly below 0.4% in September. 489 million seats this month versus 491 million in 2019. We're down on last month, but that's normal because we're passing, we've passed now through the Northern Hemisphere summer seasonal peak. And actually, if we look back to September 19, that decline in the black line between August and September was a reduction of 6.3%, so sort of seasonal norm. This year, that reduction is slightly smaller, so just over 5%. So arguably, maybe that's a slightly better, a better picture. If we look forward, which we always like to do, we've got scheduled capacity here going forward for the rest of the year. Now, John, it shows a bit of a decline, doesn't it? But we're not too worried about that. There's a credible explanation for that, isn't there?
Yeah, there is, Deirdre. It's the Dad's Army don't panic moment. So what you're seeing here really is the major Chinese airlines are yet to file their winter schedules. Mm-hmm. Now, whilst the rest of the industry and indeed the Chinese airlines work to an IATA winter and a summer season, the Chinese airlines have their own equivalent of the IATA slot conference, where they agree their schedules and frequencies with the Chinese authorities unilaterally, probably about 2 months before each season, and then they start to load the schedules. So we're now beginning to see some of those schedules being loaded, and that gap will probably disappear within the next 2 weeks. I think for some of the larger airlines, the likes of China Southern and Air China, who've got lots of international services, code shares, alliance partners, a lot of their capacity is already in for the winter. But when you get to the smaller second-tier Chinese carriers, you know, those have only got 8 million seats a week or whatever it happens to be, then they're still loading their schedules. And it will be interesting because we're expecting to see, this is the moment in time when we expect to see the Chinese market begin to travel internationally and capacities change, you know. Already amongst those 2 airlines and a few others, we're already seeing more frequencies to Australia from China in January and February than we've got at the moment. They're up by about 60%. Mm-hmm. And to the US, they double as the bilateral restrictions that have been in place ease in the coming months. So it's a bit of a false picture. Don't panic about it. I think with that as well, we'll also see the balance between domestic and international changing. Yeah. Because if they're going to fly more international flights, then they're going to have to find that capacity from somewhere, and it's coming out of domestic networks. I'm sure most of the Chinese airlines will be delighted to be flying international services rather than domestics. You know, it's a dollar-based industry. They're not earning many dollars at the moment. They'd love to get some hard cash, pay some of their bills back. And of course, international flying is typically more profitable than domestic services. So lots of reasons for us to be optimistic. But as always in this industry, you know, there's something around the corner that will catch us by surprise or make us think twice about what's happening.
Oh, that's a bit of a gloomy premonition, but I'm sure we'll come back and tease a bit more of that out of you as we go. I think the point you were making there about the international gap, if you like, you know, we are seeing that narrowing over the winter in the future part of the schedule, and we have seen considerable movement. If we look back to March, actually. On the gap between 2019 international capacity and this year, we were 15% behind, and now that's dropped to just under 7%. So much closer, but of course the missing part is as you've said, outbound China international to a range of important markets.
And let's not forget, when we're saying we're nearly tracking 2019, we've lost that red line of.
We have
3-4% growth per annum that we would normally have. Now, you know, given what we know now and the shortages that we're seeing in terms of resources, pilots, materials, engine parts, spares, etc., would capacity have grown by that amount? I don't know. If it was a normal year, we would probably have had, you know, higher load factors and a bit more capacity that we could have squeezed people into. But as we're still in many parts of the world in this revenge spend, almost like denial that there's an economic crisis and that you've got no disposable income anymore, load factors in many parts of the world, according to IATA, were at their highest ever in August. So, you know, we're seeing some really strong numbers coming through. And we'll see that in some of the data we got later about airfares and demand.
I think what's also really interesting is, you know, we sort of said all along, didn't we, that this was going to be a long, slow build back to where we were, you know, a 4 or 5 year recovery in some cases. And I think the temptation, perhaps, not so much of late, but the temptation was to think that there would be this strong bounce back and recovery. And we certainly, you know, we've done a lot of looking at long-term forecasting over the last few years. And typically where you've had a big event, you get a bounce back and you're back on track within 18 months to 2 years. Now, obviously, unprecedented, to use that awful word, in the context of the pandemic. But looking ahead to some of the capacity data, as I was having occasion to do earlier this week in some markets, there just are some markets where there's a new baseline, and some of those are very, very positive. Some are not yet at 2019 levels and not really showing any indication of getting there.
And every country, every region, you know, as we said all the way through the pandemic, had its own event and its own timings, and we're now seeing that as we come out the other side. So, you know, we have American Airlines yesterday actually saying demand for the last quarter looks a bit soft, and we're probably not going to hit our profit targets that we were talking about a bit earlier this year. And at the same time, we've got Europe still relatively strong, with strong demand and capacity, new entrants, new routes. And Gary can talk to the fact that Asia hasn't yet reopened. And even when you look in parts of the world, you know, North America, you've got the US that just carried on regardless, very strong domestic market. Just to the north of that, the Canadian aviation market was destroyed during the pandemic and is still in recovery mode.
Yeah,
so we've got all these places in different events. And, you know, what we're seeing in the US now, in terms of a slowdown, the concern about corporate demand and its recovery, and Lufthansa saying this week that, you know, maybe a third of corporate demand is not going to come back. Well, hello, everyone's been saying that for a while. Obviously, the Germans got their towels on the beaches before anyone else, but didn't remember to sort of look at what the econometric data was saying. But it's interesting that we're going to probably experience what's happening now in the US in about 6 months' time. And this time next year, or maybe January 25, we might be looking at Asia and saying, oh, hang on, the market's overheated, it's slowing down now. You know, people haven't got the money to travel, whatever it happens to be. So it's a really, it's a very different picture in every part of the world.
And I think, let's just flick back to the slide deck and move on to our next slide, which really takes that step down into the kind of regional picture. This is comparing summer capacity, so the summer season from the end of March through to the end of October for 2019 versus 2023 summer, just really to sort of illustrate that those differences that are going on. We've split out China from Asia Pacific because it's got such a big domestic market that has the potential to skew the Asia Pacific numbers. And when we don't split it out, people always ask us to. So we've done that. And we want to focus later on a little bit on China. But globally, when we look at capacity for summer 23 versus summer 19, just 1% behind. So almost close enough to call recovery at a global level. But obviously there's those regional differences that you were alluding to in terms of, you know, the different pace of recovery. Seasonal differences obviously have driven that. And there have been some markets that have just continued to grow. It's defying the interruptions that have happened.
Absolutely. I mean, in North America, you've got, you know, and in Europe to a degree, you've post the pandemic, low-cost carriers have got out of the blocks much quicker than legacy airlines and got greater capacity share. We're talking, you know, 1%, 2% in changes in share, but the significance of that over time is important. And if you look in the Middle East and Africa, we've got Saudi Arabia with Vision 2030, and what's that going to do in terms of the competitive dynamics Riyadh Air, the creation of a super hub in Riyadh in the next couple of years. And in China, we've got lots of interesting things going on there. Daxing never really developed as it was supposed to pre-pandemic. How will that evolve? You've got in Africa, West Africa until recently, doing really, really strongly with new entrants, huge capacity growth, inter-regional connectivity developing. Every one of these regions has its own story and its own detail, and you could bury yourself in the data, and there's lots of interesting things going on in all of these markets. And in this hour, we don't get enough time to go into the detail of some of these things, and some of them are fascinating. What's going to happen in Europe? 3 big low-cost carriers. Does Europe need 3 big low-cost carriers? Question mark.
I think you just helped flesh out the webinar topics for the next few months, John. Maybe we'll have a focused, dedicated session just to go into some of these issues.
Yeah,
you're right.
There's lots.
Can
we go back? Can you go back to the diagram?
Of course, Gary. Yeah, of course.
I'm gonna stand up for Asia Pacific here, because I think actually 90%. Okay, it's the lowest region globally in terms of recovery. But that's a remarkable achievement over the last year. If you look at where we were a year ago, and 18 months ago in particular, when most of the region was closed, Southeast Asia didn't really start to open until April 2022. Japan, Korea, Hong Kong, Taiwan, that was about a year ago. China didn't. I know China's taken out of that figure there, but for so long, Asia was playing a huge game of catch up, and it's now back in the game. You look at that 90%. I think that's a pretty impressive recovery. What would you say, John?
I would agree, Gary. I mean, from where it was to where we are today is quite remarkable. But it's not, it's not just the recovery; it's the potential. Where is the potential for further growth in the next 5 or 6 years? And ASPAC does include India. And that's a rapidly growing market in its own right. Indonesia, of course, is big. More capacity to come back into South Korea. So, and Cathay's at 42% of its normal production at the moment. So that's got a long way to grow as well. Yeah, it's an exciting time in ASPAC, and there will be strong demand in the next 18 months. We're coming into your peak holiday season, aren't we? So everyone's going to be eager to travel.
I think it's particularly the point you're making, Gary, about it's good going to have got to 90%, particularly in the knowledge that China has not really properly been open.
John said earlier that the devil is in the details. When you dig deeper beyond those figures, there's so much happening. And John's mentioned some of the key markets that Indonesia, India. There's big expectations from those, as well as China. Intra-ASEAN is really starting to move again. The airports are looking much busier than they were even 3 or 4 months ago. And as you say, Deirdre, this, although in the Western Hemisphere, looking back over the summer, here in this part of the world, we're looking forward to a highly anticipated end of year travel season.
Let's hope it delivers. And there's been a lot of learning from the headaches, I think, that we had here last year. On that, let's move on now to our next slide, which is just asking the question about how has the industry coped this summer season. We thought an interesting perspective on this might be to look at global cancellation rates. It's something that we tracked throughout the pandemic and was kind of a measure of how things were, how airlines were responding to what was happening in terms of demand and other resource constraints. And so when we look at global cancellations, the typical rate 2019 was around 2%, just a little bit above 2%, and that was the norm. 2019 wasn't a particularly unusual year. We saw last year that the average was up closer to 4% in 2022. And 2023 has been interesting. The average year to date coming in the right direction, down to just over 3%. but still with some spiky areas and problems, of which is another story when you drill down into the detail. There are different things going on in different regions.
The drivers behind these cancellations, Deirdre, are very different to what we were seeing last year. By and large, the majority of airlines and airports had sorted out their issues. They'd found the resources, they'd renegotiated the pay conditions to make sure the security people were in at 4 o'clock in the morning. Whatever they needed to do, they had done. And then the rest of the aviation ecosystem, or parts of the ecosystem, failed for whatever reason, lack of investment in over many years, lack of experience, whatever it happens to be. Then you put severe weather events on top of this, from hurricanes in the United States in Florida to severe weather fronts over the northeast coast, preventing lots of traffic in New York, to global warming in the Mediterranean and fires that we saw. Many factors outside of the control of the operators have influenced cancellations. And ultimately, the pain point is really more on the airlines who are having to sort these issues out and having to reprotect the customers and try and find space for them on the next airline, when actually the regulator maybe has failed or someone else has failed during that travel experience. And that's where the investment needs to go. And, it's unfair. And it's not very often you get Willie Walsh, CEO of IATA, and Michael O'Leary agreeing about anything apart from a pint of Guinness at a bar. And they both say, and quite rightly so, that others have let this industry down this year.
And I wonder to what extent these are issues that really were there pre-pandemic that, will require investment in or a rebalancing perhaps of the norms of the cost of things. We all know that the cost of just about everything has gone up during and post pandemic, and there's a feed through to all of the parts of the aviation ecosystem there in terms of cost. And there's only so much that a handling agent can be squeezed, or a fuel delivery company can be squeezed, or a catering company to deliver the same levels or indeed growth. So I think when we think about all of those parts in the system and their ability to resource and provide capacity and redundancy, that's the other issue, I guess, isn't it? In that what we have now is an industry that, yes, has moved through the recovery process. It's certainly outside of Asia, it's had a year of more normal operations, however you define that. But actually, there isn't a lot of spare resource in any aspect, in terms of people, in terms of infrastructure, in terms of equipment. I think all of the things that we are seeing in terms of increasing cost is having a bearing on that too.
And you think about, as an industry, what the return on capital employed is, and you take out the top 15, 20 airlines in the world who are hugely profitable, very successful, good operating margins, good returns for shareholders, etc., etc. This industry lives on a knife edge of margin, and we know what happens when the price of oil moves in a particular direction, or the US dollar collapses or strengthens, and the impact that can have on airlines' balance sheets. But then that begs the question, how can airlines afford to carry those additional resources that would allow them to have the contingency and the resource to be able to accommodate some of these things? And even if they did have that operational resilience, what can you do when there's a big weather front? You can't.
This is the neatest illustration of that, isn't it? In terms of what we saw, what happened at the end of August in the UK, that you can have who could have prepared for that, I suppose, is the question. But the ramifications of that kind of disruption, and we saw similar, not quite as catastrophic, but similar issues in the US, didn't we, earlier in the summer?
Yeah.
You
I mean,
know,
and if you look at July broadly, those are industry norm rates of cancellation. In fact, it could be argued they are better than normal. That was looking like it was going to be a good summer in the UK. And then someone in France sends a piece of paper to NATS, the air traffic controller, and it goes no. And suddenly the whole system goes in meltdown and everything stops. Not does it just stop, it stops on a bank holiday Monday 1 week before the schools return. So you have all the families and the children trying to get home. You've got all of the, reprotection that you need to try and make, and you can't because no seats are empty. And you've got everyone complaining and screaming at the airlines. It's not the airlines' fault. Yes, they might not have communicated as effectively as they could have done. Maybe they didn't share as much information. But you know what? They probably didn't know themselves, because they would have been waiting to hear and understand when things were going to return to normal from a flow process.
I think one of the challenges is, and we talked quite a lot last summer about the perception of ease of travel, and how to what extent, I think last year everybody was so delighted just to be able to travel again that people were reasonably forgiving of interruption, lost bags, disruption. I'm making a sweeping generalization here, but I think there was a sense that it was always going to be a bit tricky, this kind of return to travel. As we're way past that now, there's a risk, isn't there, that the kind of disruption that is caused by events like this, and these things have always happened, they've always been weather-related events or computer glitches or computer failures, but they seem to be relatively frequent now. And
it's interesting. I absolutely agree that we're getting worn out with these. The reason we're getting worn out with these is because of that horrible thing called social media.
Yeah.
And the fact that everyone is tweeting and telling their own personal story, and it's being picked up by their friends, family, newspapers, whoever it happens to be. And, it's being made a big story. And every delay is a personal experience and an inconvenience. And some can be minor and some can be, transformational, or could mean you miss a family event, whatever it happens to be. I completely and utterly get that. But these were happening 20 years ago. Just as frequently as they are happening now. But we're just living in an instantaneous society, and social media is just fueling all of that discussion and that chat. And it's really, really tough for the airlines, I think.
I guess it's to what extent it impacts on demand. That's my kind of question. Does it? And maybe that's a question for Gary in a region where there's still that sort of element of uncertainty.
Gary knows where the stepping stones are across the lake, and so do I. But very few of us can walk on water. So if you want to, and particularly in Gary's area, if you want to get around the Asia Pacific region, slow boat to China maybe, but most people are going to get on a plane.
It's true. The connectivity is flying. We don't have the same rail networks that you have in Europe, and we've had this staircased recovery. So we didn't have that huge surge problem that you had in the US or in Europe last summer. But we do have bottlenecks, particularly in domestic travel during the public holidays. Countries like Vietnam, where there is huge surges, Thailand as well, huge surges during public holidays. There are long queues, bags go astray, that kind of thing. Doesn't get quite as much coverage because it tends to happen and move away quite quickly. But there are concerns that, manpower issues and resource issues aren't back to where they were before the pandemic. We do have a big surge. Chinese travelers, Indian travelers, Russian travelers coming in all at once, as well as the regional travelers. Maybe that could be a problem at the beginning of next year. Who knows? Let's hope not.
Yeah, fingers crossed. Fingers crossed. Okay, let's move on to my next slide, which builds a little bit on this sense of sentiment, I guess, but I think it's becoming more than that. So, John mentioned earlier, you know, when we sort of led at the start, changing weather patterns have really marred the European summer. This year we've had the highest temperatures on record right across the Northern Hemisphere. I think Tokyo was 35 degrees for a number of weeks every day, which is perhaps not as unusual as it is for London or some of the southern Mediterranean countries to record those kind of temperatures. But it's the first year that I can recall where it's felt like there has been real disruption to leisure travel. You know, we had tourists being evacuated from Greek islands because of wildfires, and the media, of course, you know, ran on a loop these stories at peak travel time. I think the interesting question is, to what extent will we look back and think these were the years when travel patterns started to change? And there are different ways that those can change, I guess. Do people start rethinking, is this zone of heat somewhere that we want to go to? Speaking as someone who lives in a pretty cold country most of the time, a bit of heat is nice, but there's a threshold beyond which we probably don't often want to go. 46 might be pushing it. And will we see, what's interesting is we just pulled out the key Mediterranean airport summer capacity this summer versus 2019, not expecting to see, you know, any real shift. And the variance here is just the percentage change in capacity. Obviously, strong growth across a bunch of Greek destinations and island and mainland, Croatia mostly, some strong growth in Italy and the south of France. The question for me is this a pattern really that, you know, is this going to continue, or are we going to see people? I think you referenced the Baltic beaches earlier, John, which are beautiful, but the clue is in the clue's in the name. You know, the Baltic Sea is not the Mediterranean Sea. It's no warm bath.
No, it's not. But you know, if it is just too uncomfortable, then you can see potential markets and summer vacations drifting north into other destinations. Either that or seasonal extensions. You know, Greek hoteliers having to open their hotels in October and November, or in the Caribbean, some of the islands that, you know, have been outside of the hurricane seasons or the path of the hurricane are suddenly becoming potential targets as the Caribbean warms up and brings them into play as potential destinations that could be impacted by tropical storms. So I think it's an evolution rather than a revolution. But over time, we are going to see some people say, I'm not going to tolerate that. I can't put up with that. You know, that's far too hot. And particularly when pricing in Western Europe for package holidays and airfares in that period from the first week of July through to the end of August carries such a premium, you know, families are going to say, I'm not going to pay that to go and sit in a hotel room and I can't go outside because it's just too hot. And, you know, I'm worried about my child's skin and I'm going to have to slap oil on them all the time. Whatever it happens to be, I think we're going to see some shifting into the shoulder seasons. And that may have implications for school holidays, you know, and how holiday patterns are structured. And, you know, I'm sure there are many parents who've done the analysis and said, I'll take my child out of school for a £60 fine for a £400 saving on a holiday in the last 2 weeks of the year when all they do is play games and watch TV. So there's lots of different things at play here that will change the way we think about travel and the way we behave in travel in the Northern Hemisphere. And that's going to happen in the Southern Hemisphere just as well, I think. You know, this is an impact that's going to affect us all.
Yeah, I think I think the interesting thing is, like so many things that impact the industry, is that there will probably not be one obvious catalyst to these things. And I think the risk of whilst on one perspective, the change in seasonality that might happen by people traveling in October instead of July, or April or February, it instinctively feels like a good thing, particularly if you're running an airport that's very seasonal, and you've got a sort of, what does your revenue look like for the rest of the year? Great if you're spreading that out. But if the model of your destination or your airport or your business is predicated on a sort of seasonality that has always been that case, that way, that's that kind of change just doesn't happen overnight. It did in the pandemic, in that the markets all turned off and everything went. So I think it's really challenging for lots of destinations to think about how to extend the season, and to envisage that the peak might not be the peak. The peak that was might not be the peak anymore. What does that look like?
I think in this region, Deirdre, Australia is quite a good example. If you go back before the pandemic, there were 2 or 3 really hot summer seasons.
Yeah.
And Australia is a very aspirational destination for Southeast Asian travelers. And there was a definite trend before the pandemic where they were traveling in the winter months to avoid the summer. And I think that trend is going to continue, probably with more strength going forward. Australia's had sort of weird weather patterns the last 2 or 3 years. Had that really bad summer fire season just in 2019, 2020, just before the pandemic. And then it had sort of rainy seasons. And I think there's a bit of trepidation in Australia about what this forward-coming summer could actually bring. And you could see that, Southeast Asians tend to staircase their travel again through the winter and autumn months.
Yeah. And I think it's going to be something that just evolves, isn't it, over over the coming years. I don't think, as I say, we're going to see a sort of lightning shift in one direction.
One of the corollaries of that is that autumn and winter in Australia, prices tend to be a bit lower, particularly for like car hire, things like that. But that's not happening anymore. The rates are going up all year round. There's no that sort of shoulder season or down season anymore. Demand is quite high throughout the year.
Which I guess is good news for the operators, not so good news for the cash-strapped traveller.
Yeah.
So okay, let's move on to the next of our slides. It's going back to John. You were talking about the kind of characteristics of some of the growth that we're seeing from carriers, and on this one, we just pulled out for North America and Europe by carrier, summer 23 capacity over summer 19, to just see who's leading in terms of growth. And there's a clear story, isn't there? There's a kind of clear message of
very much. As I said earlier, the speed of the recovery from the low-cost guys. Timing is sometimes fortuitous, and you happen to have aircraft being delivered at just the right time, and that's certainly helped Frontier and Spirit. But they're on an expansionary drive, which is I think shaken a few of the legacy carriers a little bit. They'll always tell you they welcome competition, but these guys are beginning to nibble a bit more at the edges than perhaps they wanted to in the past. And in Europe, you can see Ryanair. I mean, they just keep growing and growing and growing. Maybe the surprising one is Turkish Airlines and Pegasus, who've both got strong networks. In the case of Turkish, a base that is brand new airport, plenty of capacity, wide-bodied aircraft coming online at the same time as some more narrow-bodied equipment, and they are investing heavily in growth markets where they have geographic advantage. So Central Asia is a hotspot for them at the moment, Uzbekistan, Kazakhstan, and with those countries unable to connect their diaspora through Moscow, which used to be the normal way of travel, you're seeing a lot of that flow through Istanbul and the UAE, which is I think a change of travel patterns. And then you go right to the end and you see Lufthansa and Air France, both of whom will say it's not about quantity, it's about quality. And I think you would do if you're in that position. But if your assumption around quality is that the corporate market is going to return and you're going to have a product that meets their needs, then as Lufthansa was saying yesterday, probably a third of corporate demand is probably maybe not going to come back at all. Then it's a bit of a worry for your future business model. So I think that's interesting. Some of these numbers also hide the fact that we've got this ongoing issue with aircraft engines and the necessity for more regular checks, which is impacting airlines' ability to perhaps put as much production into the market as they would have wanted to. I tend to look at this in a slightly different way. My view is, I bet they're lucky that they've got this issue at the moment, because as demand softens in the winter, they'll be able to capacity manage more effectively, maintain high fares, and also send some invoices to aircraft manufacturers for non-performance. It's a win-win for them.
Okay. Let's move on to our next slide. I think, and again, you mentioned earlier, John, that we certainly heard from American, I think, about third quarter earning warnings. We're seeing fuel prices climb slightly and weakening demand. That's what was cited. Interesting, on the bottom chart here, this is the inflation rate in the US over the last couple of years. So it obviously peaked at a high last year, and it has been coming down, but we're still seeing mortgage rates being elevated in the US, which at some point is going to impact on demand, if not already. And we've got the same issue in the UK and in parts of Europe, where mortgage rates have remained high. I think actually in the US they're now double what they were at the beginning of 2022. And there's this conversation about to what extent are people prioritizing travel. I think we've seen that. There's a big question for us in China. We're seeing economic growth slow down there. This bottom chart here is the GDP growth projections by quarter through to 2024. So there are questions, I guess, about demand and to what extent people will have money in their pocket, but disposable money to spend on discretionary items like travel, or has travel become an essential, an essential part? And I guess for the Chinese outbound traveler who has not had the ability to travel, there's a prioritization, isn't there, Gary? And that's what all of the destinations across Southeast Asia will be hoping for.
Yeah, absolutely. That's what they've been hoping all year for, Deirdre. I think that too many destinations just thought it would be press and play and everything would go back to 2019. And we've seen that 3 years of the world's largest outbound market being isolated from the rest of the world has had immense and consequential impacts for the economy, for society, for the travel industry, for consumer sentiment. All of those things come into a pot together. We look at the slowdown. We look at the economy has been destabilized. There's no question about it. There are structural problems in the Chinese economy, but there were before the pandemic as well. There's issues about real estate. There are concerns now about some of the insurance companies, export demand around the world. The currency is weaker than it was before. All of these factors play in. But as you also said, Deirdre, the world over the last 2 years has had economic pain. There have been some real tough economic touch points around the world. We've had war, we've had conflict, we've had supply chain, we've had huge inflation around the world. But there does seem to have been, and it seems to be proved in the figures of airlines, of hotels, of destinations, this kind of decoupling of economic reality and the desire to travel. Now, I can't believe that that's going to be any different from China. I really don't, because the genuine demand for travel domestically shows that there is a passion for travel. It's how that translates into the international arena, or what pace, or what scale, and how that recovery is going to happen. It will happen. I just, I think everybody's kind of casting their magic wand around at the moment to try and work out whether it's going to be in the last quarter of this year, which everybody hopes, whether it'll be the first quarter of next year, or whether we're actually going to see a much longer recovery, perhaps into 2020.
You have the pent-up revenge spend yet to occur in that market that's beginning to finally exhaust itself and burn out in Europe and North America. There was only so many fridges you could buy on white goods, weren't there? I mean, at the end of the day, people ended up with more disposable income stashed away in banks for a rainy day, or they decided they were going to take the holiday of a lifetime. And we've yet to see that experience start to emerge out of China, and it will do. And of course, that's going to mean very good yields for hoteliers and ground tour operators and package companies, because they're going to price accordingly.
Yeah. And that recovery in Asia Pacific is starting to happen. There has been progression over the past few months, but it's very different market by market. And as you were saying earlier, John and Deirdre, a lot of that is related to where the actual capacity is at the moment. You look at Japan, you look at South Korea, you look at Thailand. Probably Australia will come back a lot stronger as well over the Australian summer. But other countries in the region, like Cambodia, Vietnam is still struggling a little bit in terms of Chinese travel. So it's a very, very mixed picture. And as you always like to say, John, the devil is in the detail. There is no aggregation of this across markets across Asia.
Okay. Talking of China, then let's come to our last couple of slides, where we wanted to look just really at the current picture, knowing that, or anticipating, as we're all eagerly hoping that things will be very different by the end of this year. I think this slide just really illustrates the lag in international recovery and the return of that. Whilst we saw earlier that China, in terms of capacity, is up over 2019 levels. Even when we look at city level, we can see that Beijing is outperforming 2019. So 2019 are the slightly darker colours, 2023 the slightly lighter colours. Again, all summer schedule data here for that period. Chengdu, similarly, a much improved position, partially because there's another airport now, which wasn't there in 2019. Similarly, Guangzhou is better, although Shanghai is still lagging behind in terms of overall capacity. But the international market is just not there yet. And that's simply because travel has either not been possible because of the lack of access to group travel, or there have been other constraints in terms of visas or passports, or a number of other things. So I think this is just this might be an interesting line in the sand to come back to and revisit. 6 months, Gary, maybe 3 months. What
expectations in the region are that we'll have a clearer picture by Chinese New Year next year. But I think you're right, 6 to 12 months. But I think this goes back to the beginning of the year. You wrote recently, Deirdre, that when China reopened on January the 8th, I think it was 13% of its international capacity was running at that time. It didn't really increase very, very quickly. There are a number of factors. You've gone through most of those there. And one of them has been, this constraint on group travel, which is such an important part of our market. It's been phased back over 8 months. China is now fully open for about a month since early August. But that staging of recovery has had a huge impact on how the Chinese travel industry recovers, rebuilds, reshapes, consumer confidence, all those kinds of things, the airlines especially. China is fully open now, really, unless you're in Canada. And so expectations are going to be huge over the next few months, particularly here in Asia Pacific. And that's starting to take hold. Countries like Thailand this week, think South Korea are dropping visa requirements, issuing visa waivers to try and attract as many Chinese travelers as they can this year, because, as you know, in this region, the metric of annual visitor arrivals is so important to governments, it's so important to the industry. And countries like Thailand have set quite high targets this year, 25 to 28 million. And it won't get anywhere near that unless it starts attracting more Chinese very, very quickly.
But it's also the value of the Chinese traveller, isn't it? Not just in their leisure experience, the hotel, and all of the products on the ground. No one spends more in a duty-free airport on their way back home than a Chinese traveller when they think about gifting and the value of the gifting. For everyone, this market coming back is a huge opportunity to recover some of the losses of the last couple of years.
Yeah, you're right, John. It's a whole ecosystem, and business travel in this region as well. Chinese business travel and government travel. Those are big important sectors for the region. They haven't really recovered to where I think expectations were back in January. So yeah, the next 6 months, Deirdre, let's talk again and we'll see where we are. But
Right,
will those expectations be met? I mean, we don't have a crystal ball. Anything.
Yeah, we don't.
But we will have the same resource issues, and the same capacity issues will eventually begin to occur in Asia that we've seen in North America and Europe in the last 18 months. All of which means that airfares are going to remain very high in that part of the world. Even with the new and emergent low-cost airlines and the capacity they're putting into the market, there are some airlines that are going to be charging very expensive fares for those last few seats on their aircraft, particularly in the
nicely segueing into our final slide here, John, where we have pulled a snapshot of some fares. Now these are slightly skewed by the fact that travel wasn't really properly open, but this was the kind of rebound effect that we saw from some announcements of a reopening of travel from China earlier in the year, and this data just up to June on both. But these are storming fares, aren't they? Almost incredible.
They're they're no different to when a desperate Australian wanted to get back to Australia, and the only way was on one of the 30 seats Emirates or Qatar Airways could sell on their services at the height of the pandemic. When we saw silly $10,000 economy type fares being sold. And it's exactly the same here. It's that sudden reopening, the uncontrolled reopening, because let's not forget, it was almost like overnight. Oh, we're open again. We can start traveling if we want to. That pent up demand from some people who are desperate to travel, sometimes, for very good family reasons. And it will return to normal. But these were exceptional moments. And I think we need to always, whenever we see numbers like this, we always need to remember what caused it to happen, rather than think, wow, why did that happen? Next year the yields will not be anywhere like that, I am sure.
You heard it here, a prediction.
Well, I hope they're not, because I'm not paying that fare for an economy seat on any airline, quite frankly, particularly between China and North America.
I think I think there's another topic that would be worthy of more discussion as fares, and whether whether the days of really properly low fares.
But interestingly, in both of these markets, Deirdre, for various geopolitical reasons, will North American airlines want to go back to China in the way that they previously operated? And will European airlines be able or want to continue to operate longer sectors through Central Asia, return journeys via the North Pole, additional operating cost forever? Or will we be in a situation where Chinese airlines become the dominant carriers in these markets, feeding their alliance partners in their respective hubs? It's difficult to see how certainly some of the European airlines will put the frequency back in that they previously had into China.
And I think that kind of calls into question, doesn't it? I mean, the other interesting thing we could have added to this was the extent to which these markets were being driven by outbound travel from China rather than a sort of more two-way market, and they are very heavily skewed towards serving, just as we were talking about earlier, the strong demand for travel from China. But the extent to which that gap for the USA, so this is market size in capacity in 2019 versus currently, there's a sort of expectation, I guess, Gary, a bit like you were saying, that there'll be this switching the tap on and it'll all come flooding back. And I think what we're suggesting is we're not so sure, and we're not sure what the composition of the carriers is really going to look like in all of these markets.
Yeah, that's true. And I mean, John mentioned this the other day as well, is that when you look at markets like Australia and the US as well, which are, capacity should be coming back, they have different elements to leisure and to business. They have strong education markets. They have strong visit family and friends markets from China as well. A lot of the visit family and friends have probably, you suspect, been waiting to see what's going to happen with prices, what's going to happen with frequencies. So that could unleash over the coming months. Australia for sure, as you say. The US is still uncertain in terms of the frequency and the two-way capacity that we'll see over the coming months.
And when you look at the China-US market, 2019 there was a lot of tier 2 Chinese cities to tier 1 US cities being flown by secondary Chinese airlines that were unprofitable, but were flag waving type exercises, symbols of nationalism.
Governments.
Yeah, exactly, and very, very attractive subsidies for the airlines to fly, but we're never going to be profitable. And in these moments of austerity in China and with the economy where it is, and do they have the funding to support that, firstly? And secondly, do those airlines want to go back into those markets anyway? I mean, it strikes me that we're not going to see such an eclectic mix of Chinese airlines flying into Los Angeles and San Francisco as we did 4 years ago.
I would say that's a given. I think you're right. The public sector debt in some of those cities is unsustainable. And as you said, they didn't make any money. There was no value to it except, as you say, a bit of flag waving. And I would imagine the central government will kibosh those.
All of which means that plane spotting at those airports is no longer as interesting as it used to be, probably.
There's a reason to justify the affair, John.
Absolutely.
So we're nearly out of time, and fortunately that was us on our last slide. Any last thoughts about what's to come, Gary? I guess from your perspective, enthusiasm and anticipation, perhaps about about what's coming for the next quarter in your part of the world, anyway.
I think so. I think, there's been anticipation, there's been optimism throughout the year, but I think right now we're coming to the point, as you mentioned earlier, this is a really busy period, starting with the Chinese Golden Week, running through Christmas and New Year, and then on to Chinese New Year. There is huge anticipation, there's huge expectation. Whether those expectations will be met, who knows? But there's certainly going to be a much busier, a much more rounded and fulfilling travel program than we've had for 4 years.
Yeah, that's got to be progress.
It really depends where you sit, doesn't it? Because where Gary is, it all looks quite good. Here, I think there's a bit more caution to be added to what's happening. It's not going to be as bad as previous winters, I don't think, for a moment. But things are beginning to soften a bit. Price of fuel's going up a little bit. There's enough things out there that make you think there needs to be some careful management of capacity. And the economic realities that we've ignored for too long are going to come home and to roost in the next couple of months, and that will impact demand, and with that, profitability.
I think I liked the phrase you used earlier, Gary, about sort of decoupling economic concerns with, with the prioritization of travel. I've probably got that very badly wrong in my take on it, but I think that's a short-term thing, and I think that's what we're certainly hinting at or sensing in Europe and North America. All of these things are conversations to be continued for sure. Gary, I think you have an open invitation to come back, and let's see if this optimism is founded or unfounded.
Sounds like you've got an invite for a walk, Deirdre.
Yeah, absolutely. That's my dogs telling us that it's time to wrap up. And John, you and I will be back on the next webinar a month or so from now. I think our date is the end of towards the end of October. Really getting into some conversation about fares, revenue, and what we're seeing as more airline results start to come in over the next month or so.
Yeah.
So thanks everyone. Thanks for bearing with us with the new platform. I think there've been one or two small headaches, but hopefully a better experience all round. And look forward to seeing you on the next webinar. Thanks everybody.
Thanks everyone. Bye.
Bye.